Hello and good morning. Week number 23. We're starting off by having a look at the DAX. DAX on the left-hand side is your 50-minute chart. It's the futures. On the right-hand side is the cash market. It's currently about literally just opened minutes ago, and we have left a gap a good few hundred points lower. However, market sentiment is a bit bullish because of a little bit more of the things that happen in Europe over the weekend, and some alleviations in the oil market as well in terms of supply side. So you could expect the DAX to be staying quite elevated for today, but we will be analyzing it a little bit further as we move on to the week. The thing I need to discuss very quickly just now, because the situation in that is fluid, is the no confidence vote in Boris Johnson that's right now moving the pound. It's actually moving up. It's difficult to understand where the bigger direction will be if the confidence vote falls flat. I think market expecting nothing to come out of it. So I don't think will be no confidence vote won't amount to anything. I think Boris Johnson will have that support, and market is getting that bullish bet, and hence the moment that news came out, you saw pound or cable, I should say, jumped about 40 pips or so. But we'll keep an eye on this. It also makes analyzing pound a little bit more difficult until we have a better understanding of what the situation is. But let's move on to the calendar. So for this week, we have the RBA meeting, which is the most interesting thing for me for this week. So the RBA is expected to hike rates and then subsequent, subsequent meetings too. Now the thing is with the Australian dollar, and let me pull up the chart so it makes a bit more sense. The thing with the Australian dollar is it rallied quite a good chunk already. If I take it to the daily, you can see it did a good rally, pretty much halfway from what it dropped there, and now it's kind of stalling. And from here on, we need to understand really where the next 100 or 200 pips lie for Australian dollar. For me, it's straightforward. Look at the way that the RBA is reacting and the way that inflation is still building up, and China is stimulating the economy. It gets you very excited for more upside for the Australian dollar. And I would not be surprised if we're going to be revisiting the 0.74 level very relatively soon. Again, two key drivers behind that is going to be pushing this higher. One is the RBA. So we've got a lot of positives. One is China stimulus, and the other one is still inflation is there quite aggressively in the market, and that is all helping Australian dollar recover. I expect this to go higher to more or less a degree against all other currencies as well. And that's the direction we'll be trading ahead, before and after the RBA meeting that's commencing tomorrow. So that's one of the things I wanted to look at. The other one we like to look at is on Friday, we have an all-important CPI from the United States. So I'm very keen on reading that. Did the video on this before, that the CPI reactions to in the market are quite significant. It tends to create swing trades. Not always able to catch them, but they're certainly there, and it gives you a breathing room to wait before those catalysts come along. So I'm going to have a look at the last 3 meetings just to showcase this as well on the chart, and probably take one of the pairs which is a little bit more prominent in terms of that price swing reaction to the data. One of them is the pound. So we'll take it down to the hourly. You can see the reactions. The last meeting, the last data I should say we had was on the 11th of May, the CPI data for the United States, and it came quite hot. So on the 11th of May, we had the CPI data come around here. You can see the mad price action, and out of that, or I should say post London fix, which is the 4 o'clock candle, we had a good dive of about 120, 130 pips. And sometimes if you're quick enough, if you get the right market reaction, you do get good trades out of these levels. The one before that was the 12th of April. And then after, I'm going to look at one more just to really drive home the market reaction post those CPI readings. So on the 12th of April, we had another CPI reading. We had a straight dive here a better part of about 63 pips. However, the bigger move was actually to the upside, with the London fix getting smashed through, and we had a good 100 pip dive the other way around before it found its leg lower again. The one time before, that was the 10th of March, which was around here. And the London fix I actually marked out here. So you had the traditional, that's the one I usually tend to look at. You had your break under your London fix that comes post CPI. And you had a touchback, which caused pound to drop better part of 100 pips or so. So going into Friday, I'm expecting more or less the same thing. The trade might not materialize on Friday, it should probably materialize the following week, but it's something to keep an eye on. The other thing you want to be keeping an eye on is the euro, because the euro is heading into a meeting where they're expecting that the ECB on Thursday will be stopping the QE expansion, and they will also start announcing rate hike path, and that is giving euro a bit. It's quite interesting how far euro came looking at these lows, and I think in the medium term we're still trying to box out what's happening here. So just to give you a quick rundown, what happened, there was a bit of a retracement here out of those lows, and right now it is sitting in that sort of a box where market is trying to figure out which way we're going. CFTC data shows a lot of buyers came in, so a lot of buyers stepped in here, and they continue to buy these lows, where the bears aren't really strong right now. And going by that, I will have to conclude that we probably could see a breakout, but that's nothing you want to be front running at this stage. It could easily be that it touches there and then comes dramatically lower, as this is our long-term target still. Actually, we're looking at long-term targets lower. But we will have to see and be nimble what's happening around the ECB and before the ECB meeting, and how positioning is unwind. So we keep an eye on that as well. Apart from that, a lot of our trading will come down to sentiment checks on a daily basis, and where the sentiment lies, where can we catch better trades, because right now as we're starting just about rolling onto the beginning of June, there are a lot of positioning unwind still taking place. One of them is in the bond market, so the 10-year, if I look at that, it's pushing those highs again. And we're very critical for all your yen pairs for this to continue to be able to expect a bigger rally coming out of that as we are rolling into the next week. Because if that doesn't happen, then the yen pairs would come down again, unfortunately, which is then a little bit hampering the entire move of higher yields, higher cross yen pairs, and higher inflation. So that's something we'll need to keep an eye on. Something else that is right now pushing market are yield spreads, and we talked about this at great length in the past. So yield spreads for Germany, or I should say Bund Treasury, is pushing higher. That's given impetus and a push up for Euro USD to also keep climbing. If I look at one to other pairs, you get a better understanding as well. So pound is getting stronger against Aussie, New Zealand dollar, Canadian dollar to some extent, against the US dollar has climbed as well, and against the yen it's pushing new highs. So you can expect a little bit more muscle to come from the pound as well. And looking at the CFTC data for the pound right now, you can appreciate that there's a lot of short build-ups just now. That is causing a little bit of a squeeze, or positioning squaring can cause the pound to squeeze higher on the back of this humongous bearish positioning build-up, as you can see here. And most recently we saw a little bit of a position squaring from the short side, from 106 down to 104,000 positions, or we clip back down from the 6 billion, and there's some long build-up coming as well. I'm expecting this to slightly continue this week. That's why you should see some pound strength, possibly against some crosses. But we will be taking this on a day-by-day basis. This is not the week where we want to be going all out on some of the position trades ahead of the CPI. You don't tend to see this play out. So it's going to be more of a day-to-day trading activity and situational awareness to be able to make pips in this market. That's all I wanted to cover this week. It's a shorter video because we're still a bit unsure how the rest of the week will what it will yield. There's a lot of push and pull just now, we have a better picture and better idea once the ECB and the CPI is clear towards the far end of the week, where we can want to then position, and we're going to see those bigger swing trades take place again. I'm wishing you a fantastic week and a very profitable one. I'll be catching you again on Sunday. If you're a subscriber to Speculators Trading, I will be having another video out or two throughout the week as well, where we'll then discuss other setups and also actively trade them as well. Again, thanks everybody for joining. That's all from me for now. Bye.